All right, let's get right into it here. Market is down 0.7% on the S&P. Looks like only thing green today is semiconductor. Look at this, everything is red except semiconductor and Nvidia. Everything else is negative. Apple's down 2%. As you can see, Tesla is down 3.5%. These crypto mining stocks, they're down quite heavily today. Also, gold and silver is down as well. So looking at Spider here, as you can see, we talked about the fact that on the last night's analysis, that micro-term moving average for the first time since early May here, when the micro-term, that's the aqua moving average, right? When the micro-term moving average was reclaimed right here. That micro-term was a die-hard fan for the buyers. You can see micro-term, you can see micro-term, you can see micro-term. Micro-term, 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 micro-term. However, what we talked about yesterday on the last night's analysis was that it's starting to hit that micro-term too many times. It's getting too much mileage out of it. And then with the Nvidia earnings positive reaction after hours, the entire market initially gapped up, and that's a pretty sizable gap. Remember, this is where we close, this is where we open. But then the shenanigan happened. We gapped up and we faded back down. The gap was filled. Bulls trying to really trying to prop itself up on the second and third hour and to reprogram that micro-term moving average, but they failed. Huh? On the fourth hour, as you can see on the fourth hour, the micro-term, you see the micro-term for the first time. The price is trading underneath the micro-term. We have not seen that since here, as you can see, right? This is a first time. So when Matrix gives us this subtle information, we should take heed of this and sort of adjust the way we view this market, at least in the micro-term, right? Because there's a micro-term moving average. So that micro-term is lost. Maybe that micro-term sentiment is now bearish. However, the short-term moving average was also lost slightly here, as you can see on the fifth hour. But the gap area is acting as support, so we did see a little bit of green candle there. We got the short term right above it. We really don't know yet if that short term truly is there to support the buyers, because I mean the short term really, you know, been acting as a strong resistance. You see that? Look at that green moving average. That short term has been die-hard fan for the bear. We don't know at this time, at this point, as of today, if that short term is gonna act as support or not, or it's gonna just go on right away to start acting as resistance here, and that short term start curling down and price start falling. If we see that, then that short term was never fully reclaimed or never fully reprogrammed to support the buyers. So here's what I'm gonna say. First of all, the bearish divergence. The bearish divergence is weighing things down, and I've been talking about this bearish divergence for about a week or so now. And the bearish divergence, right? The bearish divergence is making things heavy, right? And some has argued that, well, last time when we had a bearish divergence, okay, and I addressed this issue yesterday, that when there's a bearish divergence, the market actually, you know, nullified it, and then we continued higher. But keep in mind where the price was. Price never breached below the micro-term. Right? Breaking below the micro-term on top of when we're having that bearish divergence and the gap up and shenanigan fade, and then continuation to the downside. Bulls did try, I have to give them that. Bulls did try on the second and third hour trying to reclaim the micro-term there. The micro-term still lost, and then we're now right on the gap area with the bearish divergence. And the oscillator is not at oversold zone yet. This oscillator looks a little goofy though. You see this, how it looks? It's not as fluid like here. This oscillator looks sort of similar to like here, but not very water flowy fluid. So that's a little sus there. I feel like that oscillator is just waiting for the bulls to make a move to cross back up. But here, this is what I'm gonna say. But nonetheless, we don't have that evidence yet that, you know, until I see that oscillator crossing back up, I think we still wanna sort of give that, you know what I mean, that bearish divergence of some weight here because we lost that micro term and that up gap is getting threatened. One, it will be best if this gap is protected for the bulls. That's the best. Number two, it wouldn't be the best, but it will be okay if the gap gets filled, because if the gap gets filled, it's gonna act as support. And you can see we have all these pivots come here, that dotted pink, and midterm moving average is not too far away. Probably is gonna meet it at some point if that gap gets filled. So 2 is okay for the bulls, right? What's not okay is 3. The 3 is this. If we see a down gap, if this thing gaps down either tomorrow or Monday, right? And while this up gap is still remaining open, if this thing gaps down tomorrow morning underneath 523.23, then what's gonna happen is this entire thing right here is gonna turn into a what? Island downgetting center. Boss Bear is gonna come here, start commanding his bear troops, and Bear is gonna wanna break through all of these pivots in midterm. Possibly the worst case scenario, they're gonna try to come here and threaten this gap right here at 515 or so. And so 3, the option 3 is not good for the bulls. So option 1, option 2, good for the bulls. Option 3, not good for the bulls. Option 3, good for the bears. So because there's so many supports and you see all these support. We got the gap is gonna be support. We got the pivot is gonna be support. We got another pivot here. We got the midterm here. We got the long term here. So bears need to go through all of it, despite the fact that we do have a bearish divergence again. That this oscillator looking very sus here. Probably the divergence that oscillator is kind of scared of all of this. All these supported areas are going through. But here, look at this. This one's just very flowy. So that's what we're dealing with here. So because the micro term is lost, I think the micro term, we're gonna see some shenanigans. I think bulls are going to struggle because the micro term is, now the micro term is lost, which hasn't seen this entire month. We may see some fluctuations here in this vicinity. We might even see coming up here, you know, and retesting 528.20. And nonetheless, whatever happens, a buyer's got to make sure there's no island down gap.
Perfect.
Bears, I think the best, if you're a bear here, you look for some bigger selling. You're really looking for targeting some of these down gaps. Only chance you have is making this into an island down gap. Sign up to yearly. It's gonna run you about $60 a month. So I'm gonna be looking at 65-minute chart here, and I'm also gonna be analyzing the daily, and then at times I'm also gonna be analyzing weekly chart as well, so you can see that daily. So I'm gonna give you a total complete recap, analysis and forecast. With 65 minutes for sure, we're gonna be looking at more often, and then daily, on a daily basis, we're gonna be looking at daily as well, because daily is very, very important to understand where we are at in the midterm of sense. And but what about the longer term, right? What about the primary term? That's what we're gonna do weekly. And in weekly chart, we're not gonna be analyzing it every day or every week, because weekly chart is gonna move so slow. But obviously, you know, time to time, I'm gonna talk about it when I feel like it is time to talk more about weekly. So if you really wanna dive deeper into spider focused in-depth daily updates, and I think this new feature that I've just started today, it's gonna help a lot of traders where you're gonna be able to see my 65-minute chart live from open to close. And obviously my take on where the oscillator is. And then they're gonna give you guys an also email updates. They're gonna be midday update, post-market update, weekly videos. This is where I'm gonna talk about 65-minute chart, daily chart. Every video, 65-minute chart, daily chart, complete recap, analysis, which I'm gonna be talking about key support and resistance with moving averages. Again, 65-minute and the daily. Trend reversal signal, trend continuation signals, overbought, oversold. I think all of those signals came about in a very crucial levels, right? Very crucial levels. Again, this is daily chart. The crucial bullish divergence signal came about in October 2022. There's a bearish divergence signal we talked about. There's another bearish. This is daily chart, guys, and something that I don't share, right? I don't share with you guys this daily chart. Sometimes I do, but not in detail on X or on YouTube. There's a bearish divergence, and I think the crucial how I was able to call the low during 2024 October was, you know, there was a primary to moving average here. You see that? You see this moving average? That's a primary to pink, thick pink. Follow that thick pink here. This is daily chart. This is daily chart. Follow that thick pink. You see how it came down to that level before you went vertical for 5 months straight. Not only it came down to my primary to moving average, we also had a bullish divergence here on that oscillating. This is a daily chart, guys. So combining 65-minute chart analysis along with the daily chart, and I'm gonna give you a recap and forecast on the weekly, and time to time I'm gonna be giving you some special videos, special charts, whenever I feel that there's something else I want to talk about. I love analyzing this S&P 500. It's my favorite. I don't look for any trades unless I know exactly where the S&P 500 is. I do not look for different setups, or I don't go through any other indices or any of my positions. I don't even look at any other stocks until I figure out where the S&P 500 is gonna be. Once I understand the trajectory of the S&P, then I extend my analysis to the NASDAQ and semiconductor, and then I start looking at the broad market, and then I go out to individual equities and look for setup. That's how important I think the S&P 500 is. Most people don't realize. Right, that's why most people, they don't realize, well, when they should be short, when they should be going long, when they should be shorting. So they just do both, right? They're always shorting and long, any given moment, because they don't fully understand. And obviously in this type of market, last year and a half or so, it's been a very, very difficult market to short anyway. So you understanding, I think, where the S&P is, and I think that's going to really help as you navigate this market. And hopefully I can able to, navigate this market with you and equip you as we all trying to be successful in a stock market here.